Welcome to Market Week in Review for the week ending May 21st, 2021. I'm Sophie Antel-Gibert, and I'm joined today by my colleague Shay Shatria, Director of Investment Strategies. Shay, it's a pleasure to have you join me here today. Thank you for being here.
Great to see you, Sophie.
Terrific. I have been really looking forward to our conversation, not just because it's my first time I get to have this conversation with you recorded, but also because there's been a lot going on in the markets this week. First off, we had Fed meeting minutes that were released that were anticipated to be a bit of a snoozer, turned out to be not quite such a snoozer. Second, I'd love to get your thoughts also on, we've been getting some inflation numbers coming out globally, what you're seeing there, what's catching your eye. And then lastly, Bitcoin has been all the rage recently in the news. I'd love to get your take on that. Sound good?
Sounds great.
All right, terrific. Well, maybe starting with those Fed meeting minutes, right? These are the minutes from the meeting that was at the end of April. They were released this week. That meeting was expected to be a little bit of a sort of predictable outcome. Turns out that the meeting minutes revealed that that meeting was a little bit more interesting than expected. Can you give us a little bit of the behind the scenes there? What from your perspective, with your economist hat on, what did those meeting minutes reveal to you?
Yeah, indeed, Sophie. I think the meeting minutes had a bit more spice than what the markets were anticipating, and clearly that did cause a bit of market turbulence. There wasn't anything new that was expected to be revealed, but what did catch the markets off guard a bit was that some of the Fed officials in their deliberations were open to the idea of making some adjustment to the Fed's asset purchase program. Of course, we also call it quantitative easing or QE. So any adjustment, or in this case, tapering of their asset purchase program, would have been contingent upon sort of rapid and substantive progress towards achieving the Fed's goal. And that language is really what caught the markets off guard, because the idea there being that, well, if the Fed is perhaps thinking about tapering earlier than what is being priced in, that also suggests that the financial conditions would become a little bit more tighter sooner than what the markets are currently anticipating. And that's what actually caused a bit of market volatility. The broader point, Sophie, I would say, is that the Fed, having these discussions is it's actually not a bad thing, because it's a reflection that the recovery is strengthening, and that's what we all want, right? At the end of the day, we want we want the economy to recover, we want things to start to normalize, and therefore that's why they had those types of deliberations.
Awesome. That really helps. And I like that perspective of, it is a little bit, it sounds like a little bit of a replay of that taper tantrum that we had a few years ago when the Fed initially started reducing or saying that they were going to reduce the quantitative easing. It sounds like we were reliving that a little bit, but at the same time, a reminder that this is actually what we wanted. This is actually good news, because it means that the economy is improving. So we've just focused quite a lot on the US. Obviously, what's happening in the US has an impact globally, and what's happening globally has an impact on the US. I'm wondering if we could shift our attention, Shay, a little bit to, we also got inflation numbers from other parts of the world. Japan released their inflation numbers, Canada, the UK, all recently reported inflation numbers. What are those looking like? Are they telling a similar story as in the US, or are their circumstances pretty different at this point?
Yeah, so we did get three of the G7 nations to release, and in some cases, Sophie, they are a little bit similar to what happened in the U.S. Last week, and in other cases, not so much. So, as I said, Canada, UK, and Japan, and I guess let's take sort of the outlier out of the equation first, and that was Japan. The rate of core inflation in Japan for the month of April, it was actually negative. It was down 0.1%. But specific to this month, I think what was interesting was there was one data point that kind of stood out, and that was cell phone prices. So cell phone prices declined by roughly 27%, and that really was what was contributing to the big drop in Japanese inflation. Otherwise, it would have likely been much higher than the negative 0.1%. So if we kind of take the Japanese story out of the picture, and we kind of focus in on Canada and the UK, let's start with Canada first. So Canadian inflation for the month of April jumped to 3.5%. versus 2.2% the prior month. So it was a decent step up. In the UK, the inflation there accelerated to about 1.5%, 1.5% in April versus 0.7% the prior month. There were certain similarities amongst the two regions in terms of what was contributing to the higher inflation prices. So the big one, and this is something that we saw in the U.S. last week as well, was energy, and that's where there's a lot of discussions about base effects, right? Prices today relative to a year ago, and you really see those base effects come through when we measure energy prices. So energy prices were much lower a year ago, and they're considerably higher, have gone considerably higher since then. But then you're also starting to see some other segments like call it clothing or travel, leisure, the areas that are more tied to the broader reopening and the recovery, are also starting to contribute to higher headline prices. And we also have to keep in mind, different regions will be at a different place in time as far as their recovery are concerned. So you'll see certain differences. I think what was interesting is if you think about Canadian inflation number, a contributing factor to Canada is their sizzling housing market. So, shelter prices have shot up, and that's feeding into the broader inflation figures. And what's interesting is the Bank of Canada this week in their financial system review actually talked about they created a house price exuberance index to measure housing excess, which is I thought quite interesting, but gives you a sense in terms of the differing inflation dynamics and what's sort of going on under the hood in different regions.
One thing that I know that a lot of people have been keeping an eye on, and maybe even their wallets on recently and their investment accounts, is Bitcoin. We've seen some resurgence of interest and volatility in Bitcoin. Can you give us a quick 411 on what's happening there? How should investors be thinking about that?
The roller coaster that is Bitcoin, right? It's been incredible to watch. What we do need to kind of keep in mind is that this crypto, Bitcoin crypto space more broadly, it is still new. It is something that we're trying to get a better handle of. We're sort of trying to determine, what are its price patterns. How does it behave in different market environments, different macroeconomic environments, inflationary environments. One thing that we do know, and in sort of a more of a definitive, I guess, conclusion, at least at this point in time, we can make is, this crypto space does come with an incredible amount of volatility. So for investors, that's something that they have to have the stomach for. And maybe one last point I'll add to that is. So Matt Randolph, our colleague, has actually put up a blog on the Russell Investments website, which kind of digs a little bit deeper into crypto and just provides pretty good context around this space. So if there are those that are interested, can kind of hop onto the Russell Investments blog.
Thank you. Sounds like it'll continue to be a volatile ride, at least for the foreseeable future. Well, Shay, that's all we have time for today, but thank you so much for your insights. I really appreciate it.
Thank you.
And thank you for joining us. We'll be back again soon.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.